Did you ever think that 2024 was going to be easy to invest? If yes, you're not too wrong, because the market has been unidirectional, right? It's been unidirectional for a long time now, maybe from 2014. We have really added a lot to the market capitalization. Could the government sell some PSU stocks and make money? That's for a different day. But look at the political uncertainties which are happening. UK elections, where the left wing has come to power. In Paris, the left wing has come to power. In fact, if it was not so, there would have been even more violence. But it's a horrible situation. The Olympics is to be held. The players who have gone from other countries are being harassed. One Australian girl was raped. With all these conditions, in any other part of the world, if the Olympics were to be held in India, it would have been cancelled. They would have said law and order is not good. But in Paris, Paris being Paris, the Olympics is being held. Just a few weeks ago, you saw Trump having an assassination attempt on Trump. He escaped with a small scratch in his ear, and he's perfectly all right. He's able to make public speeches. And I'm not even getting into whether he will win or lose. But with all these uncertainties, you expect the market to come down, right? That's what people think, that in case of uncertainty, market crashes, or at least market comes down. The market can be irrational for a much longer period. Remember that. And the market can say, okay, this is over, and now what next? So it's not always that the market reacts in a way that, oh, Trump has been shot, the market has to fall 100 points, 200 points, 500 points. No, it does not always happen that way. But yes, when there is uncertainty, it's very difficult to invest in the market, and all these are supposed to be, an assassination on the president or the potential president of US is a pretty rare event. Yes, it happens maybe 2-3 years in over 200 years. That's not a very regular event, but it did not take much of a toll on the market. Let's remember one thing, whether it is Rahul Gandhi going to Manipur, or Rahul Gandhi saying that Narendra Modi is not going to Manipur, or whether extra money being granted to Bihar and Andhra Pradesh thanks to the political compulsions, all those allegations in place will not impact the stock market, because the stock market's fundamentals have not changed. Two things matter in the market: the fundamentals and the technicals. The fundamental means how much the company is earning, what is going to happen in the immediate future. Look at Indigo, results were very good. Look at some of our tech companies, results were very good, and that's getting reflected in the market. Did the market fall because of introduction of capital gains? No, I think 10 to 12.5% is something which people will take. Will they pay that 20% short-term capital gains tax? Well, if you are a trader, you will pay. I mean, if I buy a share at $100 and it goes to 130 in 2 weeks, 3 weeks, I'll sell, because I think it's gone up too fast, too high, too fast, and so I'll sell, book the profit. Yes, I'll end up paying 20% tax, but so be it. I can't help it. If you're a trader, in that portion of your portfolio where you held for 17 months, and you're going to pay 20% tax, you will still pay it, saying, okay, let me just go ahead with it, because I dare not wait for the market to fall, right? So it does not make sense. So the market will go up and down based on fundamentals, how much it is earning, how much what is the PE ratio, what is the PB ratio, how much of money is coming from other parts of the world, whether the dollar is going to be strong. Based on all this, so does anything change fundamentally when Rahul Gandhi makes a statement or does not make a statement, or Nirmala Sitharaman makes a statement? Largely no. Yes, you get to see the direction where it will go. So, oh, maybe technology companies will do well, maybe the construction companies will do well. Oh, construction companies based in Andhra Pradesh, so that will do well. Construction company based in Bihar, so that will do well, right? So you will come to some of these broad conclusions, and some of those things do really change. Technically, what happens is the demand for those companies in those locations where they think there is going to be a construction boom or an infrastructure boom, that is bound to go up. That is again technical. It's not so much fundamental. So this is bound to happen in any part of the world. So whether it is Trump assassination attempt, or whether it is some event happening in India, say BJP wins all 10 seats in Uttar Pradesh by election, or loses 5 and then market is not happy. All these things can happen, but the fundamentals don't change. Technically, yes, the demand can go up and go down. So that is one thing that you have to see. If you're a day trader, the 20% tax is going to hurt. The STT, I don't think has been changed. I'm not very sure. I've not seen that portion of the budget. So what is he going to do, or what is she going to do? Well, they're going to continue to trade. That doesn't change. Don't think the government is interested in reducing speculation. And also remember, the speculator is the most hated guy. Everybody hates him because he makes money, but he is the person who is providing liquidity to the market. If you and I buy shares once in 20 years or sell once in 10 years, that is not enough liquidity in the market. It is a day trader who provides the liquidity to the market. And as far as long-term investors are concerned, I mean, people who come to this channel to watch know that it is my job to iron out all these small time things which are going to impact the market in the short run. We are players for the long run. Yes, of course, if we get a chance to make some money trading, we may do that. We may be afraid that the market is not looking too good. We may sell some of our holdings, and if the market does really come down, we may buy it. We may do all that. But largely, I mean, I'm 95% long only. Right, I don't go short and things like that. I don't even buy put options. So every time when there is some event like the president attack or anything like that, you feel now it's a catastrophe and the market has to fall. The market does not always think so. If the demand and supply is there, I mean, you go to airports, they're full. You go to hotels, they're full. You go to hospitals, they're full. They're full even with foreigners who come to get themselves treated here. Of course, the NRIs also come here. So the only important thing in all such events is we should not let our anxiety and fear make us sell all our equity and run away, right? So that does not make sense. Maybe you sell a little bit saying, oh, commodity prices are too high, let me sell because there may be better things to buy. Or some share which you bought at 30 rupees is now 500 rupees, and you say, okay, I made my money, let somebody else make the last 10% or last 12%, whatever. So something like that can happen, but fundamentally things have not changed. So you and I will continue to invest. In fact, I keep investing, I keep buying, I keep selling, I do all that. So it's not that the market is up so I'm selling, or the market is down so I'm buying. It's always a good time to be cleaning your portfolio, right? So don't go and just sell something because you are scared, right? Whether it was for people who are younger, say the millennials, for them 9/11 happened too long ago. I mean, in their life maybe they were in school, college type, so it did not impact. But whether it is a depression of 1929, or whether it is 9/11 or the 1987 crash or the financial crisis, right, all those things, or whether it is Modi coming to power again and again. I don't think the left in India wanted all that, right? Rahul Gandhi definitely as a leader of the opposition would have been very happy sitting in the Prime Minister's chair. Well, sometimes it happens, sometimes it doesn't happen. But remember, the market will get battered. Market may fall, but it always emerges stronger. So after the capital gains introduction by the budget, or the capital gains increase in tax rates from 10 to 12.5%, did the market fall? No, not really. The market consolidated, the market came up. And so is it a good time to be buying? Yes, only if you have a very long term view, because in the short term market can be very cruel. The market can go down. So, but remember, it always gets battered, but it comes up stronger, and it keeps making money. You will keep on getting stocks which are good, which are worth buying. Some stocks which you think are fully priced. You will see all this. If you are let's say an index investor, and you have invested in something called a global index, you will continue to make money as long as the world exists, right? So there will be war in Ukraine, there will be some rioting in Paris, there will be some burning in London. all those things will be happening all over the world. But companies, how much money Warren Buffett makes, or how much money Apple company makes selling their products, those don't change in the long run, right? So remember, whether it is a Reliance or Adani or anything, there will be a lot of political rhetoric. Does not mean you should get scared and do anything silly. So again, as usual, if you have a long-term view, continue to be invested in the market. But if you are trying to invest for a year or two or maybe even 3, equity may not be the best place to be in. Thank you.